Good evening and welcome to our market coverage. Let's dive straight into today's numbers. The S&P 500 closed at 742.72, the Nasdaq at 714.51, and the VIX edged down to 16.73. The 10-year Treasury yield slipped to 4.55%, while the dollar index ticked up to 99.28. In commodities, WTI crude fell 1.23% and gold slipped 0.11%. Bitcoin gained 0.34% to 77,524, and Ethereum rose nearly 1% to 2,135. Over in China, the Shanghai Composite added 0.87%, the CSI 300 gained 1.3%, and the Chinext index surged 2.84%. Looking at the bigger picture, we are seeing a clear divergence. Chinese tech stocks, led by the Chinext, are rallying alongside US tech names like Nvidia. But commodities like oil and gold are under pressure. The VIX and bond yields are falling, yet the dollar is slightly higher. This tells us capital is rotating aggressively between sectors rather than going all in on risk. Our base case for today is that China's market continues its strength, while US equities remain range-bound with a slight bearish tilt. The capital flow story is very clear. Money is pouring into Chinese AI and computing stocks, as well as US crypto ETFs, while rotating out of commodities and defensive sectors. Asia is leading, driven by China, followed by Europe where the ECB rate cut expectations are providing support. US futures are flat to open, with tech seeing some buying interest but macro headwinds capping gains. The probability of this flow path continuing is about 60%. The main risks are the Fed's hawkish minutes and the debt ceiling negotiations. On the macro front, lower Treasury yields are generally positive for risk assets, but the Fed minutes hint at another rate hike, which is negative for credit. The dollar is up only slightly, so the impact on emerging markets and commodities is neutral to slightly bearish. Oil is down but European natural gas is up 2.3%, keeping inflation expectations mixed. Geopolitically, the Russia-Ukraine conflict is heating up again, pushing up European energy costs and providing some support to the energy sector. For core assets, we see US equities as range-bound with a bearish bias. The S&P 500 has support at 735 to 732 and resistance at 745. Tech stocks are under pressure from rates, but AI leaders like Nvidia have fundamental support. China's market is driven by both foreign and domestic capital, and sentiment is optimistic, but we need to watch for profit-taking after the recent run. Bitcoin is showing clear risk on signals with ETF inflows of $210 million for 5 straight days, but the price hasn't broken through the previous high yet. Commodities are bearish, with oil pressured by inventories and a stronger dollar, and gold held back by rate hike expectations. Today's two main themes are clear. First, China's AI and computing stocks, driven by the Ministry of Industry's Computing Power Action Plan and strong fund flows. This theme has high continuity and we expect further gains today. Second, Bitcoin spot ETFs, with institutional demand intact but technical resistance near 80,000. The key swing factors to watch are the Fed rate path and any progress on the debt ceiling talks. On the risk side, if the Fed's hawkish minutes continue to weigh and the 10-year yield pushes back above 4.6%, that would pressure all risk assets. Also, if China's tech stocks show signs of topping out with heavy volume or a failed breakout, that could signal a short-term peak. Our strategy today is to lean long but with controlled position sizing, focusing on China tech and Bitcoin. Entry conditions include the Chinext opening above 3880 and the semiconductor sector up more than 1%, with Bitcoin holding above 77,500. We would add on a Chinext break above 3950 with volume, or Bitcoin above 78,500. We would reduce if the Chinext pulls back below 3,900 or Bitcoin drops below 77,000. Stop loss levels are a Chinext break below 3,850 or Bitcoin below 76,000. Let me give you 5 verifiable predictions for today. 1. The S&P 500 will close between -0.3 and plus 0.5%, with the close in the 740 to 746 range. 2. The Chi-Next will gain 0.5 to 1.5%, closing between 39.60 and 39.90. 3. Bitcoin will trade between 77,500 and 78,500 and close above 77,700. 4. WTI crude will fall another 0.5 to 1.5% to close below $96. 5. China's tech sector relative strength will continue to expand, meaning the Chi-Next outperforms the Shanghai Composite. Overall, we assign a 30% probability to an up day, 40% to a range-bound session, and 30% to a down day. The message is clear: stay selective, stay disciplined, and focus on the structural winners.